In this lesson, we will try to cover one of the most important topic in the market, that is support and resistance. At first, we'll be going through some theoretical stuff so that you get the rough picture, and after that, I'll be jumping into charts to give you a better picture. Okay, so let's try to understand what is support and resistance. Uh, Technical analysts use support and resistance levels to identify price points on a chart where the probabilities favor a pause or reversal for a prevailing trend. Support occurs where a downtrend is expected to pause due to a concentration of demand. Resistance occurs where an uptrend is expected to pause temporarily due to a concentration of supply. So this is all about demand and supply zones in the market. Market psychology plays a major role as traders and investors remember the past and react to changing conditions to anticipate future market movement. Support and resistance areas can be identified on chart using trend lines and moving averages also. Just remember one thing, price has memory. So this is a typical candlestick chart in front of us. We can see that from here market was going down, it went up a little, went down again. After that, see, sellers pushed the price till here, but it had a rejection at this particular price point, and buyers pulled the price again and took the price till here. But after reaching this particular point or this particular price zone, it faced resistance from sellers. It means that at support, buyers are sitting, or few buyers are few buyers are sitting at the support, and above some sellers are sitting who are not allowing the market to go up. So when market reached this particular price zone, it started going up, and when it touched this particular price zone, market faced resistance from the sellers who were sitting above, and they pushed the market downwards. Then market came down, went up a little, again came down. See, market made two big red candles, and when market touched this particular price zone again, this price zone, okay, again buyers pulled the price upward, and market started going up. Again it touched this particular price zone and started going up again. Market went up, and see, when market touched the particular price level upward, it faced rejection from above. That means someone is sitting, or some sellers are sitting above, who are not allowing the market to breach this particular price zone. As a result, market had to go down. And again, when market touched this particular price zone, buyers gave support and market started going up again. So this particular price zone above is called the resistance, and this particular price zone below is called the support. I believe that there is no holy grail in the market. Actually, it is a known fact to all the traders that there is no holy grail in the market. But if something that is closer to the holy grail, then it is this concept of support and resistance. Support, and if you are true with the concept of support and resistance, then you can trade on any market of the world and any asset, stock, commodity in the world. If you understand the concept of support and resistance, when market touch this particular point, buyers gave support, and when it touched this particular point, sellers were standing and pushed the market downward. Again, when it touched the particular point, buyers gave support, market went up. Again, when it came down, again buyers give support, it went up. See, market is a place, or market is a tug of war between buyers and sellers. So this is the support zone, this is the resistance zone. That, and if market wants to breach or break a particular resistance or support, it requires a huge volume. Okay. But if the volume is missing, then market always moves between the particular zones. And this zone of support and resistance is very important. Let me show you on another chart. The market was falling, went up, came down, went up, and you can see at this particular point, market was struggling hard to go higher, but market could not. Market failed to go high because it faced a resistance from above, and as a result, it had to go down. It had to go down, 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 down. There was a huge resistance from above. And again, though it is not marked here, but this zone has also worked as support for the market. See, market fell till this point, market went up. Again, when it came down, it did not cross this particular point. From this particular point only, market bounced back. This was in the resistance zone. So, but market broke this particular zone with quite good volume. You can see the size of the candle. This candle broke the resistance, which means that when the market was going upward, the trend was very strong. As a result, it could break the resistance level. So when it broke the resistance level, it went up, but again it faced some resistance. It came down, and the support went up. It tried to break again, but it failed, so it came down again. And see, market was trying to go down, but see, there was price rejection from below. You can see here price rejection, price rejection, price rejection, price rejection, price. Many candles tried to breach the particular zone, but they could not. So there must be a reason, is not it? Well, the reason is there was someone, or there are some players in the market who are not allowing the price to go below the particular zone. As a result, market took support at this particular zone. The previous resistance became the support, or support is equals to resistance. And when market got support at this particular price zone, it went up again, and see, this time it succeeded. This time it succeeded in breaking the particular resistance zone. Because look at the size of the candle, and the trend was quite healthy. As a result, market succeeded in breaking the resistance zone.